Welcome back, everybody.
Oh, do I need my phone to look at the stats?
Yeah, you do. Good start.
Oh, please.
False start. While he's going and doing that, welcome back to the Nashville Money Guys YouTube channel /podcast. Today we are going to we're going to do a Nashville market update, and then we're going to kind of probably work into strategies, how to take advantage of what's going on right now, and then we'll probably talk about some federal stuff as well. So all the fun federal like Doge stuff, what's it going to look like for unemployment, what interest rates are doing right now, / what they're probably going to do. And also we're going to talk about the fact that if you're listening to anyone who is positive about what is going to happen, that they are incorrect. That's one of the things. You guys don't watch a ton of YouTube when it comes to this stuff, but the people that I watch, there are so many people with absolute certainty of what's going to happen.
Right.
And then they're wrong, and then people still keep watching and listening, which I think is so ridiculous.
Yeah, you're either doomsday or everything's great.
And the doomsday stuff is generally the stuff that absolutely gets the clicks. Because the way human beings are wired, we want to learn about the danger. Yeah. And so people are interpreting reasonable data in crazy negative ways. So we're going to actually go through some data now. So Brandon's the realtor on the team. He pulled a bunch of stuff for kind of the greater Nashville area, and then is going to dive into some of the sub markets. Take her away.
Yeah, so this is stats for the month of January 2024, and this is single family detached homes. So there's no condos, single family houses or HPRs that were detached. There were 416 listings in January 2024 versus 416 listings for January 2025.
So the exact same number of houses?
Yes.
Fascinating.
What else do we need to know? Median sales price 2024 was $470, and this is Davidson County. I don't know if I said that. Versus $500 in 2025.
So it went up.
Up $30,000, and it's the same number of. Did you say listings with the 416?
Yeah, 416 closings.
Okay, so that's actually closings.
Correct.
Okay.
Yep. Yeah, so 470, 470, 275 to be exact.
I'll put these numbers on the screen, by the way.
Okay. Versus 500 exactly in 2025. Sales price per square foot went from 261 to 269, so up slightly. That's the median number. The average was 705 for 2024 versus 702. So the average actually went down a little bit. So there must not have been as many higher end homes sell in 2025.
Be interesting to see if that sales price per foot based on the average square footage made up that $30K.
Yeah.
See,
$30K per house is a lot of money.
Yeah. $30K times
30 divided by 470 was the.
You're 7%, something like that.
Well, and how much more money went into people's pockets the last year at $30K extra per, what was it, 500 listings? How many? 416 times 30K. That's how much more money went into.
What percentage increase was it?
6%, but it's only a 2-digit number, so it's probably 6 something, and it's rounding down to 0.06.
Wild.
Financial calculator.
But you would have assumed that with housing prices absolutely skyrocketed in the early COVID times, and then rates went up, and for some reason it's still hammering northward.
Yeah.
Price per square foot is slightly down, but $30K per house, 6% increase in the worst interest rate environment we've seen
in a long time.
It's just, it blows my mind.
In our lifetimes. Yeah.
It doesn't really make sense. So why is this happening? Or is it literally just people just being I don't care. I'm just at the stage in life where I'm going to buy a house.
Yeah. It'd be interesting to see, because obviously January 04 and 05 markets are similar in terms of macro. Obviously there's been some changes, but how many homes sold in January of 2000 and the height of the madness in 2020 or 21? Is the number of overall sales actually down, which maybe I can pull those and we can edit that in, but
yeah, we could.
Yeah, I don't know if it's just overall the number of sales is down, but
our population though is pretty different from where it was too. So there's been a big population increase
Yeah.
you know, I don't know what it would be, but that's another one that we could look at. So I would assume that, I guess if
Migration,
you're looking,
yeah.
are you talking about comparing like January of '05 versus like January of '08?
No, I'm saying like 24, 25 versus 21, 22.
Oh, okay.
When like
Okay.
the madness was happening
Yeah,
right after
yeah.
COVID.
The
and all
volume
the-
of sales.
Yeah, all the QE.
at that time. Yeah, I mean, I think too, just the migration. You know, we've had a heavy migration of people moving here, and a lot of those are from the New Yorks and the Californias, and those guys have cash. You know, when they sell their
Because
house,
they still had crap tons of equity,
Yeah.
and the houses were way more expensive than Nashville. That's,
and there's less volume available because builders like us and others have slowed down due to various reasons: costs of lots, cost of construction, market variability because of interest rates and the unknown. Like, so there's just less product available, so they're forced to buy.
But is that just fear then? Because I mean, statistically, we just looked at all this stuff. Inventory was up 20% though year over year, which is what you saw, right? Listing inventory.
I did not pull the inventory. I just pulled the closed sales, which were exactly the same. 416 versus
Where
416.
you said 20%, or maybe that was me reading my Chat GPT.
Yeah, I think that was what ChatGPT
Oh, that's right,
said when
that's
you looked
right.
it up. But what I was seeing, and again, I'm looking at only single family detached, and it was potentially looking at the whole market for Davidson County.
Yeah, because our inputs were slightly different. So I asked ChatGPT, and it said when you're taking everything into account, total houses sold January 2025 is 550. Now that includes like HPRs, townhomes, condos, and then January 2024 was 575. So 25 less homes, but
Oh, not 25%, 25.
no, 25 less homes total.
Yeah, out of 500.
Out of 575.
Yeah, it's
but I mean, it's still,
5%
it's
less.
5%.
Yeah.
But then they're talking about, okay, yeah, inventory levels, housing inventories increased by 21% year over year.
Okay.
Yeah.
So-
So inventory is the available supply. So like if you're selling 416 per month closings, like actual closings, and then there are 1,200 homes, then you've got 3 months worth of inventory that's actively on the market. So that's the active listings in terms of the number of months of average closed listings.
Fun part is, oh, good. No, I did push record. Just making sure. That would have been great. So when we get into a healthy market, are they typically saying 3 to 6 months worth of inventory is healthy?
Yeah, I think most experts would say 5 to 6 months is a balanced market. So maybe healthy is not the right word, but balanced in terms of, not a buyer's, not a seller's. So if we're, and I did not pull the actual number of current listings on the market versus that 416,
I'll just ask real quick.
but if we're, well, your numbers will be skewed again because it's going to pull the full thing. But
I can ask single family.
But assuming that's correct, there's 3 months or so.
yeah, let me just pull a number of active listings and we can edit this part to.
This is interesting. It's saying Zillow approximately 35.33, Realtor.com 48.29, and Redfin 29.33. Why are those so different?
That's how many listings? 2,900?
Yeah, but I mean, that's Redfin. Realtor.com's got 4,800.
Oh, interesting. I wonder if that includes like land and stuff. Like,
Maybe.
Vacant
But I
land.
mean, if that's the case, if it really is 4,800, then we have 10 months worth of inventory on the market.
that's substantial. It is funny, like, to think about just how, your baselines, like of, I don't know what the right word is, like, but like your feelings and how that works.
Right.
Sorry. During COVID, you had, 30-day sales, like just bam, 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 bam.
Oh, and
Like
you were-
prices going crazy, list
Yep.
it whatever you want. It's just selling. It doesn't matter. Then, so we all get, this is amazing. This feels normal. now.
normal. That's the
Yeah.
thing is you lost
Yeah.
the objectivity of this is not normal. It became the new normal.
So then it goes back to 2-month sales, and everyone's like, it's a seller's market, or it's a
buyer's market.
Yeah.
Oh my gosh.
Like, I
Th-
need
things are gonna
discounts. I
slow
need free
down.
roofs. I
I
need
know.
AC units. Like,
But you know what? I think we were kind of guilty of it. Like we
Yeah.
were willing to give way more concessions when we felt like things were slowing down.
Yeah.
Quotes.
yeah.
We
and
started-
and the balanced market is at 5 or 6 months potentially. Yeah. And so
What did you see? Did you pull?
Yeah, so 1,679 with that same criteria. So detached single-family homes, there are active listings of 1,679.
Okay, so that's 4 months worth of inventory then?
Just over 4.
So that's the interesting thing about when guys like the Reventure Consulting guy are like, inventory's going up. And it's this, catastrophic, like, oh my gosh, you're like, we're still well within what they consider. I mean, we're still on the low end of what's considered a balanced market.
Yeah.
That's so goofy.
Yeah, and the other thing that's interesting is when we were looking at the stats, if you were having to finance the purchase for what the median sales price is, the average income in Nashville doesn't support it. So that means you have to have buyers that are coming in with considerable amounts of down payment when they're buying on average, because the average income in Nashville doesn't coincide with what the mortgage payment would be if they were financing that total amount. Wow, so you've got to have either move up buyers that are moving from a $400,000 house, they're selling it, they've got $150K in equity and they're buying a $600,000 house, or you got to have those transplant buyers coming in from Illinois,
or you've got to have parents that are gifting money into the kids that are buying. And those little subtleties are also things that I think the data people for some reason aren't taking into account as well. Like, you can look at migration, you can look at, but I think you're exactly right. I think that the people that are still buying houses, because 416 people buying houses is not really like that much. It's just not that much
in a population of, I don't even know how much we have.
I mean, 600,000-700,000 in
Davidson.
Yeah. So I don't know. I just think if this were to sustain long term and like migration were to basically stop happening into Nashville and interest rates were to stay high and the average income were to stay where it was and inventory were to continue to climb 20% per year, we would definitely see prices coming down. Because
you would think
there's just too many, there's too many headwinds in that market.
Right.
But we had such a crazy, didn't inventory get down to like 16 or like 6 weeks at one point?
Oh, it was under a month.
That's insane.
There were days of inventory on the
So
market.
it can climb 20%. I mean, it could climb 20% for 5 or 6 years until you get back to a balanced market.
Yep.
And you just wonder too, as the price drops, is it going to be builders or is it going to be people that have been sitting on houses for a long time where they have lots of equity and it hurts them, but it doesn't hurt them, versus a builder who's out there and built something and they don't have as much. So those price drops actually do hurt them, or somebody that just bought a few years ago and they're trying to sell because they're moving, like just figuring out the dynamics of who's actually potentially being harmed in the price drops.
Which is also where we can move into as far as like strategy for investing.
Yeah.
The builder is building something that is a better quality than what the people who've lived in their house for 20 years and seen a crazy equity run up and are willing to drop the price. Those people have to drop the price because they're competing with a builder like us that's creating a product that's like really nice and everything's new. And that's a superior product. So the people that are out there flipping, and like I get this question every week from somebody, like, what would you be doing right now? And I get so many people that are like, I can't find rentals that make sense. And you're like, yeah, just keep the marketing going though and flip houses right now. Like pile up cash so that if interest rates get better, then you have this pile of cash, and you've also built this marketing machine that you've been deploying, and you're just learning how to rehab, you're learning how to sell the houses, and then you're just shifting the end result, which is, oh good, now I'm going to just start keeping some units rather than selling them.
Right. Yeah, it's kind of the who moved my cheese model. Because when we started out, the cheese was in long-term rentals, and we were able to buy properties, and we were making our general rule of thumb was if it's not going to rent for 2% of what we're in it for, we're not buying it.
So for context, if we were into a rental for $50,000, we wanted it to rent for $1,000 a month.
Correct. Yeah. And now that same $50,000 rental is $250,000 in the Nashville market, and you're not going to get $5,000 a month for it. So a 2% deal is non-existent. 1% deals are largely non-existent. Maybe you could still find a great deal on something, but so you have to, the cheese is no longer in long-term rentals in Davidson County.
Right.
But we have friends that run a wholesaling company in Louisville, and they're keeping a whole bunch of stuff in Louisville because they can still buy properties for 40 grand and rent them out for $600-700 a month. So
Yeah. I mean, bottom line is when we were looking for rentals, like you go where it makes sense. Like in Nashville right now, like inner Nashville, doesn't make sense.
But I think a lot of people are for some reason feeling like they're doing something wrong.
Right.
Like they're like, I'm not finding the right type of deals, or my marketing's not right or whatever. And you're like, no,
You're
just looking for gold in the wrong area. Like there's no gold here for this type of deal that you're looking for.
Now, I will say if you use creative financing or like owner financing terms, like you could make something potentially work, but it's not just somebody calls you with a house to sell and you're going to buy it and you're going to make it a rental and it's going to make sense.
Yeah.
Like it. Yeah.
But why would you not just shift strategies and just be like, I'm going to market in Nashville for flips, because there's still distressed houses. Like there's still people that are beating their properties up that are going to need fix up that are then going to sell retail. That will always happen. But if you're looking for rentals because you feel like that's a thing you need to have, why would you not be looking in Louisville?
Yeah.
Or looking more rural?
We could talk a little bit about that too, because when did we start flipping houses?
I mean, I was flipping before the GFC stuff happened, and we did flip throughout it.
Yeah.
Like we literally flipped the entire time. And it was way harder to sell houses during that, but we literally sold every house except one during that time. Like there was only one house that we felt like we got stuck with.
So what were the key things that we were doing at that time that people might be able to say today, oh, that makes sense,
You just have to make the nicest house in the neighborhood. So when you're looking at the comps, this is like a fundamental. This is like learning how to dribble in basketball.
Yeah.
Well, I know a lot about basketball too, by the way. We can talk about. I know nothing about basketball. You have to make the nicest house in the neighborhood, and you have to list it and sell it for what you see other comps selling for.
this is in a market where there's high inventory.
Yeah,
You have to make the nicest house. Yeah.
Yeah.
So we were selling homes in Antioch, which was not that great of a neighborhood. And we were selling them for $129,000.
Yep.
And they had granite countertops, full new kitchens, backsplashes. I mean, they were the nicest homes, and that's why we were able to sell them in that market.
And another factor I think is speed. Like you can't just say, I'll get to it. You got to knock these things out because you don't know where the market is going.
Yeah.
So if the market's continuing to do this potentially, you are buying here, that's going to catch up. You've got to act quickly and get it on the market and get it sold before they meet up.
Yeah.
So,
which is another reason not to do like crazy huge rehabs.
yeah.
Because they take longer. The downside risk is more because you might find more things that are wrong with them. So like doing more paint and carpet stuff, or doing like level 2, rehabs that we've talked about, which is like a kitchen, bathroom gut, but where you're not going in and gutting the entire thing to the studs. Yeah. Unless you've got a bunch of cushion. Like I think about the strategies that we're telling people to do, and then I look at what we're actually currently doing, and there's a lot of difference. But we had a lot of money stockpiled, ready to go. We're also like, there's some moves that we've been making that have been a long time coming.
Yeah.
Like we're literally working on deals that we've been messing with since like 2010, 11.
Yeah.
So yeah, I think that, let's go back to market. Where do you think it's going to continue to go? And I want to get your perspective. So the facts are in Nashville, like metro area, we're still seeing prices going up. Average sales are the same, but we're seeing inventory increase. So like Dodge, let's fast forward.
Oh gosh.
I don't know. Do you want to go 3 years? I don't want to go 5, but let's just say 3 years. 2028.
Yeah. So I like everything we've said so far as moving with speed, looking for those easy flips. I think that right now there is a lot of unknown that we don't know what's going to happen based on, we've talked about earlier, tariffs, government cuts, all those things, and how that's going to trickle down and affect, local markets. Like specific markets, we know that, potentially 100,000 people are being laid off in areas. So what does that do to those specific, and how does it trickle into ours?
So we shouldn't be buying homes in DC right now.
I mean, I would wait a little while, like let the market dictate and then buy on the cheap end. So yeah. But yeah, I think overall the market is not going to have wild swings. Like, I don't think it's going to.
You think that the Nashville market will not have wild swings?
I don't think so.
Okay.
I think it'll be relatively stable. Maybe prices come down some. But again, if interest rates do go down because of greater, country things going on to spark the economy, because Doge is doing all this stuff and it might affect the economy in a negative way, cutting all this stuff. When you think about that, if they do something to uplift that, I think the national market pops.
You're talking about short-term negative consequences from Doge laying off people and cutting certain government funding programs, so there's just less liquidity in the market, and unemployment will be higher in theory.
Long term, it's a great thing to get our government smaller and do all that stuff. I think, at least, not to get political, but I think that's a great thing to happen, is government smaller, revert back to states more, all that stuff. But short term, I do think it could be painful. So it's it's like cutting your budget. Like if you're spending too much every day in your personal budget and you go in and cut it, it's going to hurt. It's going to suck for a little while, but then ultimately it pays off in the end. So,
all right, Rumbly, what do you think? 2028.
2028. I think locally, our worst case scenario is we see some of the between now and then, we see some of the higher end stuff potentially drop in price. I think our median is likely worst case scenario to plateau. I don't really think our median sales price is going to suffer much between now and then, just because Nashville is still Nashville and there's still people that want to move here from other places. So I think we've got enough of the transplant buyer to overcome any potential downside headwinds. Macro level, I think we're kind of at the end of the macro cycle where at some point the economy is going to break enough where there has to be a new injection of liquidity in the market, and the money printer is going to turn back on, and there's going to be free, cheap, available capital in the next 2 years. And that's only going to make asset prices go higher. So I think 2028, we see Nashville real estate prices probably up 25% minimum from where they are right now.
Over from where they are right now?
Yeah.
Wow. Okay. I think it's going to be an absolute bloodbath. And the reason I'm saying that is because I need a title for the video. So no, I'm just kidding. I think that I agree with you as far as the liquidity that's going to have to happen. And I think that based on the federal budget that the House just voted on, where they're literally voting on further deficit spending, which is crazy to me when you have Doge over here with one mission, and then you have this entire other arm doing the opposite. I think you're exactly right. I think that the money printers are going to have to turn back on. I think that Trump is going to do whatever it takes to get interest rates back down if they start actually seeing the market start to break down.
I agree with that.
And so I think that QE will continue to turn on. And I think that if you just look at like house prices historically from where they started it, if you look back to like 1900, it's so crazy what has happened based on just the sheer amount of money in the market.
And think about what's going to happen if those interest rates do go down, because we only have 419 sales or whatever it was out of 700,000 people. There's people that want to move and that want to do stuff. So the second those rates drop, it's just going to be like boom. So
I think so too. Did you look and see what month the highest amount of sales were in the last few years? Like, did you look in COVID? I'm going to ask ChatGPT real quick.
No. Yeah, while you're looking that up, this is an interesting, I think forecasting 3 years out is, obviously we don't have a crystal ball, but I don't think that's that difficult of a thing to kind of look at everything that's happening and go, yeah, they're going to have to pump more liquidity in. But what's interesting is thinking about 15 and 20 years out, because really there's no way off of this train with what the federal government has done and the printing of money that's happening. And so they have to keep doing it, and it'll ebb and flow, but ultimately they just have to keep debasing the currency and printing more of it and try to inflate their way out of all the debt that they have. And it's interesting to think about 15, 20 years out. Really the only for real estate is population. The only downside factor that I see long term is what happens to the population, because population is declining across the world, and it's declining in the US, but not to the extent that it is in other countries. So are there enough people still moving here? If we have net immigration loss with some of the Trump stuff that's going on, how does that affect housing? Like, yeah, the 2 to 3 year picture is an easier target to look at than
or the shift,
20 years out.
Just like on a local area, the shift from different market to different market. Nashville's booming, but New York might be hurting. So like it's hard to put it all together.
Well, and you think about something that like the Palisades fire that happened out in California, and it destroyed. I think it was. I'll put the number of houses in here. It was tens of thousands of houses.
Last I heard it was like 17,000 or something like that.
I think that's what I heard, like pushing 20,000. Yeah. So you have 20,000 houses, a lot of which were really high-end houses that are going to scatter those people to new areas. Mm-hmm. How many? There were previous fires in California that they said that those areas 10 years after were only 40% rebuilt. So that's people that had gone back in themselves and rebuilt them, but it's also people that just said, I'm not doing it, and then new people have moved in. Yeah. So how many people moved to Davidson County into 12 South or into the high-end condos downtown or into Williamson County, which is, the more expensive county down south of Davidson, and buy a bunch of $5, $6, $7, $8 million houses because they just go, I'm just tired of this.
Yeah, you're in California, and I think there was an article that said they were going to require them to be built back with all these energy features that were going to, like the cost of building was going to be $800 a foot or something crazy. Jeez. So like how many people are just going to go, yeah, no, I'm moving to Nashville or Austin or
just wherever. So like how much does that bolster other markets? Because how many multi-million-dollar houses are selling in Williamson County? It's not that many. 17, 20 a month, maybe. Like I'm talking $4 to $10 million.
Yeah, I think a lot of that depends too on just obviously what they can do with what they lost. Are they going to get a check from insurance, or is there enough in lot that they can sell the lot to somebody else to do something, or are they just out? There's a guy you were talking about the other day.
Grant Cardone was talking about a neighbor that he had who had $28 million into his property, and he only had $3 million in insurance. And the dude lost all of it.
Yeah.
Wow. And Grant was like, he's a rich guy. He's fine, but he's not going to go do that again.
Yeah.
And there's so many of those stories. There's so many stories about people that were drastically underinsured because they thought if we ever lose anything, we'll just go back in and rebuild. But if the government's going to mandate, they haven't even started cleaning up. They're not. I think Adam Carolla just showed he's finally gotten to see his house, and it had been 30 days. 30 days since the fire, and he hadn't even been able to go to the house yet. That's crazy. It's going to take so long that there are going to be people that spread across the country that are very wealthy. They're going to move to Williamson County. They're going to move to the high ends of Davidson County, which is going to continue to push the median price up.
Yeah.
So I don't know. I think that you're right. I think 3 years is probably a pretty easy place to project. But the bottom line is right now, if you're trying to going back to strategy, building a marketing machine that brings in deals that you can rehab and then decide how you're going to dispose of those deals. If it works as an Airbnb, if it works as a long-term rental, if it works as a flip, that's a great thing to build in any market. What's silly is to go in and purposefully say, I have to buy a rental property when you're looking in Davidson County. Yeah. Go up to Louisville, go to Huntsville, go to the rural areas that are around. If rental property is the thing that you have to do, go fish in the right ponds.
Right.
Yeah. I think that's good. I think that was a good market update overall. You guys got anything else you want to say?
Yeah.
I think I'm good.
Wonderful to have the three of us together. I look forward to doing it in 6 more months. Hey, make sure you like and subscribe. We appreciate everybody showing up today. Check us out, NashvilleMoneyGuys.com. We're a hard money lending company based in basically the southeastern part of the United States. If you're smart and you've got fantastic flips, we would love to help you fund them. Like I said, NashvilleMoneyGuys.com. Thanks for watching.